So today I'm going to keep it as short and sweet. I know you guys want to get the value out of this video. So I want to talk to you about some of the most traded markets, what I'm looking for this week. This is the last day of October. We're getting ready for a brand new month. So there's a lot of exciting things happening. Not just are we starting a new month, getting closer to the end of this year, we have a lot of important news coming across the table this week. And I think the news this week is driving a lot of what traders are going to be doing. So before we even get into charts, I want to talk about that news. I use Forex Factory. It's a great resource if you don't already use them for free news on the entire market. It isn't just Forex pairs that are impacted here. So first thing we notice, we can actually filter news here. I'm going to just focus on these red folder news events this week that are high impact news events. The first thing is that Monday and Tuesday doesn't have too much going on during the New York session trading hours. A lot of Tuesday's news comes in the evening for me, East Coast time, New York time. That's on the New Zealand dollar and then on the Canadian dollar. It's really Wednesday, Thursday, and Friday that I think are going to drive trading decisions this week. We have the Fed funds rate coming on Wednesday. We have the GBP official bank rate, which is basically the same thing in the UK, coming out on Thursday. And then on Friday, we have NFP here in the States, non-farm payrolls, and the unemployment rate. So to just go over these events and how I'm using them, I am trying to be as unbiased as I can when I do this analysis and when I set myself up for the week. Seeing that rates, when we look at the Fed funds rate, I mean, if you're just following the news, you know rates have been going up since March. The pace of the rate hikes, if you notice from previous to actual, the pace is actually increasing. So to see them forecasting from us to go from 3.25 to 4%, which is a 75 basis point hike, that forecast to me seems to be like it's going to be accurate. If not, it's going to be more. Knowing that we're moving to 4% interest rates, or maybe 4.25% in worst case scenario, right? That would, in my opinion, be bearish on the market overall. Typically, we see this Fed funds rate, this FOMC, be one of the most impactful news events of the entire month, other than CPI and other than NFP. So now this week, we have this Fed funds news on Wednesday and the NFP on Friday. So it could be very choppy. Throughout my career trading, I've traded Forex pairs, I've traded indices, I've traded crypto. I've never really traded stocks and options, but in my career trading those markets, this first week of the month is always a choppier week across currency pairs, sometimes even across the indices. And I think it's because a lot of traders are indecisive about what this news is going to be. Now, on top of that, like I said, we have the GBP official bank rate, which they're looking to hike rates 0.75% this week. So to me, again, another indicator that things are probably more bearish than bullish. The Swiss franc reports CPI numbers. That's probably important, but not going to shake up the market as these other events that I'm speaking about will. Another important marker, but not a market shaking marker, I would say would be the ISM manufacturing PMI numbers going from 50.9 to 50. If we break under 50, they say that that's one of many indicators of a potential recession. So just another indicator that is more bearish than bullish. So everything here this week, I guess we could discuss NFP. Non-farm numbers are going to be lower than previous, it looks like. What were the previous numbers? 263? Yeah. So lower than previous. We'll see if that forecast is accurate. They are forecasting for unemployment to go up a little bit. Again, that's a bearish indicator as well. So a lot of bearish analysis here on the news coming in this week. So let's talk about where we sit right now on major indices. I'm looking at US 500. I'm going to take off the TDI indicator on the bottom just to keep things simple for now. What I want you guys to look at with me is just the average distance of the more recent pullbacks in this bear market. So we have one there, 43 days or so. I'm not 100% accurate with the days. I'm really looking at the percentage. 19%. Here you have an 8%. The most recent one that we are in right now, 12%. Let me show you a few more. We did this in our Black Shirt coaching call. I have a mentorship group where I work with traders, only 15 traders at a time. It's me and two other guys. We coach them on getting funded, scaling up their trading, and we do a weekly meeting. We talked about this on our weekly meeting. So I know these numbers, if you average them out, these pullbacks here, 12.9, 10.3. Look, we'll go and do all of them. This will be the last one that we can really look at, right? If you average out all those, 8.8, they come out to about 12. So the average pullback or average bull run in this bear market is about 12%. And that's exactly where we sit to start the week this week. And of course, each indice, this is going to vary a little bit, especially like if you look, let me erase this. US 30 is a little bit different looking over the last couple of weeks. Its pullback's been stronger, maybe just because Apple beat earnings last week and pulled this thing higher, maybe. But for the most part, the point is that these pullbacks, they last different periods of time, but they go for about 12%. So now that we've hit that 12% and we have bearish news coming in this week, it's setting me up to definitely be short biased. That's the thesis that I'm building here. You can see the beginning of September, we had a bull rally that lasted 4 days. That set in some support here at like 38.90 on US 500. This is S&P 500, right? If you extend that zone back, this is really where we first settled after the initial push down, March, April, May, and then into June here, right? So this is where we first slowed down. So that's a really important level that we're back at now. And I think you'll have a hard time just breaking above it. Even looking at today's candle, already starting the week off bearish, that kind of supports that idea. The big rally on Friday, this big bar on Friday, to me, was really driven by Apple beating earnings. So in my opinion, that's not a reason to think that this is going to head much higher. So now for the active trader, where does that set up trading ideas? Well, I'm looking to be, like I said, short bias. Now, I make my trading decisions on the 15-minute. Seeing the 15-minute trend this morning, right now, I don't know if we want to be short biased and ready to take shorts today. I think what I'm trying to set you guys up for with this stream is ideas for the whole week and why I think the shorts are the heavier play, the stronger play than the longs. Could there be money in longs? Absolutely. But I'm going to be looking for clean trend to the downside, especially before the news comes out. Once we get to the 2 o'clock hour, when that news is supposed to come out on Wednesday, you should look to be out of most of your trades, if not have stop losses locked in profit. So for me, I think that's how I'm kind of attacking this week. So today we have a trade idea this morning on US 30. This idea was really formed here at the high of day set in the Asian session last night. We did gap down to start the week. We couldn't break back above 32,855, 32,860. We break the 50 EMA here to start the London session. We pull back and set a lower high. In that lower high, this red indicator, this is my A2 strategy. It's a strategy we've been building for the last couple of months. We use trend-based fib extension tools to draw the stop loss. We're just looking for a 1618. That's the stop, which is normally at a structure point. I would want this lower high off the high of day to hold if I'm going to short this. I'm only looking for 1R on these trades. So this is actually a winning trade idea that we had this morning in the Black Shirt Club. Quick, short-term winner to the downside following that bigger, higher time frame bias. Now, if any of you guys know me or the way that I trade, this indicator on the bottom normally dictates trend. This yellow line is a sentiment line. It tells us our buyers or sellers are in control. So when we get price action giving us a short indicator, but market sentiment being above a 50 here, telling us that we're still kind of bullish, even though it's falling, still kind of bullish, that's a conflicting signal. It's not a full trending trade. It's not a clean trending trade. So it's not the best trade to come in and start your week with. It's also not the best trade to think, hey, I'm in this and it's going to rip all day. But using that news from Forex Factory, using then price action structure, two fundamental and technical indicators coming together to say to be bearish, you definitely could have made money short this morning with this A2 strategy. But like I said, I want to set you guys up with some other ideas for the week, for the bigger picture on the week. So let's erase this. Let's take a look at Bitcoin on the daily time frame first. It's kind of slowed up over the weekend. It got some push on the end of last week, Wednesday, Thursday, Friday. Saw a little surge and it's kind of calmed itself down. This hasn't moved like Dogecoin moved. Dogecoin ripped, I think, over the since last Tuesday, Dogecoin is up 158%. That's definitely one to watch. You know, Dogecoin can pick up and get very volatile. And I have a deep belief that even though we're in a bear market and that there's going to be plenty of opportunities still to make money short, I think that the next bull market, the next bull rally in crypto is going to be face melting. When it comes, I don't know, but that's my opinion. So Bitcoin, now that we're back above the 50 EMA, now that the 8 and 21 EMAs are in an uptrend, yellow is 8, red is 21. We're above the 50, we're above the 8, we're above the 21. The only thing that doesn't align with being bullish right now is sentiment, but sentiment is rising and almost back above the 50 value. If sentiment was above 50, you would definitely be bullish here. You've seen this thing now base out and it's held the base. We have not broken underneath it. This is a lesson I learned from Peter Brandt. You don't want to trade into horizontal levels. A lot of people get trapped. Let me turn the volume off. You don't really need this. A lot of people get trapped trying to go short here and here. This is what's happening. This is why it bounces so violently out of there, because people are trying to short into the break of this horizontal level rather than waiting for the break, waiting for the retest, getting in on the retest, and then taking that trade. That's the trade you want. Now that we've held the zone, that situation is completely invalid. Now that we're here, we're looking at shorter term zones to the upside and seeing how long they want to be held. So I use a rule called the 2-candle rule, where when I find a pin where 2 candles to the left and the right don't break above it, that tells me that that's some type of significant zone. So like here, we would have another zone, right? Because the 2 candles to the left and the right are not higher. We would have another zone up here. That, right? So now that would tell us we have some support here at 20,400 with resistance above at 22.6. If we hold 20,000, you would think we're moving to 22. If we break back under 20, I think we see 18. So as a day trader, how do you handle this? Well, right now, this is bullish. Let's check the 4-hour. 4-hour looks really bullish as well. Higher highs, higher lows, 8 above the 21. Sentiment is bullish. So I would say that's bullish. 1 hour, 8 above the 21. Price action above the 8, above the 50. Sentiment here, not that bullish since we had a pullback yesterday and Saturday, but holding that structure, holding that zone at 20,400, right? So you definitely could see why today you might want to come in and be long biased. Now, on the 15-minute where I look to make my trading decisions, I think with the sentiment line coming now up above 50, you could definitely justify looking for longs as the day goes on. Now, I like to look for these A2 entries. I'm going to be holding a webinar if you're interested to learn the A2 strategy on November 26th. That's at the end of November. If you follow me on Instagram and stuff, you guys will be updated on that. So I'll be giving out this A2 indicator as well. But what I'm looking for now today is, and into tomorrow probably if we hold this and move higher, is I'm looking for pullbacks to the 21 EMA on the 15-minute, or I'm looking for A2s long on the 5-minute. What these two A2s right here tell me is that this price of 20,700 is a price that we would definitely want to maybe have some longs in. Definitely, maybe you like that. If you would have taken it earlier this morning, this pin stops you out though. But now that we've held that zone, right? Dealt with the pullback, you could be looking for longs now maybe to see this come higher this morning. So that's an idea to take you into the rest of the day and into the rest of the week. If we take a look at oil, oil's bearish today. On the daily time frame, coming back under the 50, sentiment is very bearish here. Lower lows and lower highs are being made. I'm very bearish on oil, even though the 8 is above the 21 on the daily. On the 4-hour, we're now under the 50. I like that. This week, I think you're going to find some great opportunities to sell oil. On the 15-minute today, there were 2 A2s this morning at the London Open. I love this L50. This perfect L50 is exactly what I'm looking for to trade on a daily basis. If I would have been awake this morning, these would have been great trades to bid in, but I don't trade the London session. So now as the day goes on, looking for shorts on oil is the play that I'm going to be looking for as well. And I can give you silver too. So we'll do US 500, we'll do Bitcoin, oil, and silver. So silver's a little bit less trending right now. Again, we'll draw a zone down here. That's where there's going to be some slowing. Definitely have some more support here above that. I believe that with this rising sentiment line here, I think silver is going to at some point turn and come back above 19, back above 20. So here, if we can hold 18.2, 18.3, I would stay bullish. For now, with it coming down the last couple of days, let's see how the week progresses and see if we can find some bullish momentum in it, because overall, in the short term, it's definitely more bearish right now than bullish. So that's my analysis on silver. Bearish short term, bullish long term. Okay, so let me take a look at gold. So gold actually has an A2 short in play right now and not a lot of support underneath it. So that A2 indicator here would say we want to be short at 1660. Your stop on that would have been $17.12. and you're on your way to 1R here. 1R would be 1617, around 1600. When was the last time we had 1600? 2020. Wow. It's crazy to me that gold is this low. Personally, I don't understand how it's going down in price, because this is supposed to be a store of value that, you know, you can hold forever and your money won't lose value. It doesn't look like that anymore. It's very interesting, right? So that's my higher time frame analysis on gold. Ethereum, just similar to Bitcoin, you know, but you could get more volatility on Ethereum, I think, than Bitcoin in certain situations. Like today, Bitcoin's up 0.5, Ethereum's up 2% already. So that's that. We could let's look at a Dash. That one looks like it might try to make a little bullish push. I mean, all these cryptos are going to follow Bitcoin. Look at this. Look at how similar this looks to Bitcoin on the daily. You know what I'm saying? So if Bitcoin pushes to 22, you'll see these altcoins make a run. Cardano at 41 cents will make a run to maybe 50 or 60 cents. Dogecoin is already up. So Doge would be, you know, I mean, who knows what Doge can do, especially with Elon and Twitter right now. If they make Dogecoin payments available on Twitter, Doge is going to become more valuable. Polkadot looks bullish here too, just breaking out over the 50. We'll see if these breakouts hold. You know, I'm skeptical of breakouts. XRP at 46, just basing out here at the 50. Could be bullish. Could hold that 50. Definitely could be bullish. So there could be some bullish crypto momentum coming in the next couple of days or weeks. Definitely. Wouldn't surprise me. Yeah, well, someone said USD CAD in the comment. We can take USD CAD. So I think, I mean, just as we've seen with other pairs, anything with a USD base, look at USD JPY, the most bullish. You just can't be bearish on these right now. You cannot be bearish on the dollar. If you look at the dollar index, there's no time here to be trying to call the top and think that it's a good time to be bearish. Coming off the 50 EMA, last time we came off the 50 EMA, it moved up 8%, 9%. So I don't like calling tops. I would ride trends. Look at Euro USD. This is the only one, because it's an inverse, right? Anything with the USD on the quote, it's going to go lower. Look at GBP USD. They're going to be in downtrends. They're going to look bearish. So USD CAD's no different. I would say USD CAD, you would want to be more bullish than bearish, especially with this daily bar coming through the 21. Today, look at that. You actually have an A2 back here at 345. That's the London Open. That one's up 0.5%. That's nice. So yeah, I would be bullish UCAD. NASDAQ, overall today, it's a really tough read on the short term here. On the daily, I think we're probably going to see if I'm guessing, this is a guess, I'm going to guess a move higher, and then I think today we finish lower because of this falling sentiment line here. I think that tells us the direction this wants to go today. But yes, NASDAQ would follow S&P, I would think. The difference between the NASDAQ and the S&P is normally just volatility, at least how I see it. Sometimes they have different days where, but normally if one is red, the other one's red. So for me, it's more just a play of the volatility and which one's presenting the entry signal. Like I said, US 30 is the one this morning with the A2 signal short. So to me, that was the one to play short. What other questions do you guys have for me? I appreciate you guys being here live. Someone said Solana looks bullish. I'm sure it does. Yeah, they all look the same. They all are going to follow Bitcoin. So I'm just going to trade Bitcoin. It's going to have the most liquidity. It's going to be the easiest one to trade, you know. If we could get a nice pullback here on market open today, if market open is bearish, like I'm thinking it will be, pull the indices down, maybe Bitcoin gives us an A2 long. That's what I would like to. Love US 30 daily, looks so bullish. Yeah, I mean, Apple pulled US 30 for sure last week. But I'm bearish US 30 right now. We have an A2 short in play. Like I said, that already went 1R. L50 is now in the sell zone. Short term, I think this wants to come lower. On the daily time frame, if I'm right, like I said, we're going to get this daily. I mean, by the time I talk to you guys on Wednesday, we could be back down at 31.5 for sure. Maybe 31.2. That's on US 30. On the S&P or US 500, whatever you want to call it. That I could definitely see us coming back, you know. I don't know if we're going to go down 5% in 2 days, but I could see 37.75. Yeah, I agree. Definitely bearish gold. I don't think I gave you one thing other than silver that I'm bullish. Everything else I'm bearish. So I think that's where I'm going to leave you guys for today. I don't see any questions. Here we go. Do we have a team learning your strategy? Consider a prop firm. So I am funded with a prop firm. If you go to my YouTube channel, you can watch a bunch of videos. I have 20, 30,000 subscribers. Check out my social media. If you guys don't know me, my name is Austin Silver again. Follow me. I'm Austin Silver FX on Instagram and on Twitter. There's a bunch of scam accounts that use my pictures and try to steal money from people. I'm the only one with over 100,000 followers. I'm waiting for the blue check. You'll know which one is me. But I am funded, and I use this A2 strategy that I'm showing you with my funded account. I'm not going to plug the prop firm. They don't get that free promotion. They don't pay me enough. EMAs are 21 and 8, not 21 and 10. Good question. But I think right now, guys, if you look at just the 8 and the 21, they are bearish. Going into the open, I'll give you a little hint, and then I got to leave you guys for the day. The 8 and 21 shift does not normally change on market open. If you study that day by day, more days than not, the 8 stays in the direction that it is with the 21. So today, this more days than not would stay in a downshift on market open. Although it might pin higher in the next bar, it will still finish bearish. So we'll see if that finishes out. But I appreciate you guys being here. I hope you guys learned a lot. I will see you guys Wednesday for our webinar, and then I'll be back again next Monday with some more analysis for you. Make sure you're subscribed to the 8cap channel. Make sure you check out my channel, and I'll see you guys on Wednesday.